Hey guys, what's up? It's McNeil.
And Anna.
And today we were just talking about how or should you be financing a car if you have less than perfect credit. Is it a good idea to finance a car if you have crappy credit?
What kind of car? A used car?
A used car.
Used car.
Well, if you have crappy credit, nobody will give you a new car anyway. But a used car.
Okay, just wanted to make that
Make sure it's a
Yeah.
used car. Should we be fine? I mean, you'll get a loan at any dealership, that's for sure, because a car loan is the easiest thing to get.
That's right.
If you have bad credit. Actually, that's the guys they're looking for, you know.
That's right.
But should you get involved in that? Should you finance a used car with bad credit?
Right.
What do you think?
Like, what are we talking about? How much am I financing? Maybe that's what we should talk about first. How much money do I need to finance?
Well, okay. So most used cars, an average used car, something decent that you would require financing, probably sells for about $16,000 thereabout. And that's a more average car that people would need financing.
Right.
I would jump right into the answer. I say no, we should not get involved in the financing
Yes.
game with bad credit. And there's a reason for that. There's a reason why the rich keep getting richer and the poor keep giving their money away and saying we have no money. Don't finance something that's a depreciating asset, first of all, right? The car is
Meaning that the car is losing value. You just bought it, and tomorrow it already isn't worth what you bought it for.
exactly.
It's depreciating.
And then I know some people out there would jump in and say, well, I mean, a lot of rich people are finance, like other people basically finance cars all the time. Business people finance cars all the time. So why would you say don't finance a depreciating asset? That situation is a little bit different. And that's kind of like how the rich is smarter with their money. Because what they would do is if their new car is 50 grand because they got money, right? First of all, they're going to be financing that car at a more reasonable interest rate, maybe a 4 or 5% interest, let's say, you know, if that's on the high end for somebody with good credit and have money. And the reason why they would do that is because that $50,000 car, let's say it's a $50,000 car, their investments are paying them more than 5%. So if they got 50 grand, instead of buying that car cash, and they know they can put in an investment that can pay them 15% or 20%, they would obviously do that investment and finance the car. So technically, they're still in profit by financing the car. Make sense?
Right.
But if
So
you're
you're-
broke
Right.
and you don't have any investment,
Well, it's possible that you have bad credit because you were unable to pay some bills because
Right.
life is hard, and sometimes you have to work really hard. You don't make enough money. Maybe you got into an accident. You couldn't work. Whatever reason, chances are you have bad credit because
right? Whatever
you
reason it
have
is.
maybe some financial difficulty. So
Yes.
So why are you putting yourself in more financial difficulty?
Exactly.
Sorry, I didn't mean to take away your thought.
The banks are not. No, that's fine. The banks are not, or the dealership or private lenders. They're not giving you money because they like you.
Right.
They're taking advantage of this shitty situation that you're in.
Yeah, you didn't get approved because they're like, oh yeah, you have bad credit, but it's manageable. Here's
Yeah,
some
we'll
more.
help you rebuild that
Let
shit.
me throw
No,
some more money at you.
they're trying to make you stay in that position that you're at. And then if you think I'm full of shit, here's what you need to do. If you got bad credit, wait before you sign on that dotted line. Please just read what you're signing.
Yes.
If you have bad credit, a 15% interest rate sounds good. For people out there listening and have good credit, you'll be like, what, 15%? No. For people with bad credit, that's actually the good rate. That's a decent rate for them to get. But that's not a real rate. Because that would be what we call the posted rate on the finance document. And there's going to be another rate lower down, very small, that you probably have to initial next to call the effective rate or the real rate, the true interest rate. And that's the rate that's after your fees. All those fees they're going to charge you, financing fees, is going to be the real rate. And most times, I bet you, those rates are going to be almost 30% interest. That's right, 30%.
30%?
30% interest rate.
30. 30. Not 13. 30.
Right. So, look at those numbers. Here's a simple math for you. If you paying a car loan for $300 a month, because the average car loan is about $350 a month, times what they charge you, maybe 4 or 5 years. Look at your monthly payment times how many times you have to pay it, because they might tell you bi-weekly or monthly, and then see what that total money is. And that's what that $15,000 car is. Most times it's going to be double. So if the car cost 15 grand originally,
Right.
after taxes and finances and fees and everything, at the end of 3 or 4 years, whatever your loan term you're gonna give them $30,000.
Wow.
Buying that new shiny car and invest in it and financing it is not investing in you. You're investing in your image, what people think about you.
Exactly.
Right?
And you were probably focused on a monthly payment. You're like, okay, well, I can afford, $400 a month. And then that's all you're focused on is like
Totally.
the monthly payment. You're not thinking about, how much money you actually gave to the finance company after 4 years, 5 years. You're just thinking about, the monthly. But we need to always be, mindful of the long term and how much money are you throwing away in a way.
Yeah.
Especially like McNeil was saying that, the thing that you're throwing your money away is not increasing in value. It's depreciating. So it's not like you can resell it and think, oh, I'll just resell it and get all my money back. You won't. You'll not get half your money back.
Here's what we should do. Start investing in you and rebuilding your credit and putting yourself in a better financial situation. Okay? We focus too much on how much money we make and not what we do with that money. So what I would recommend you do, most times if you have the bad credit, they're gonna ask you for some equity in that overbook loan anyway. So they're probably gonna ask you for a $3,000 to a $4,000, maybe even $5,000 down payment, right? So
That's true.
buy a cheap car, buy a beater, buy whatever you could afford, and pay for it cash.
It doesn't have to be a beater.
Well, for $5,000, I mean that's what you're gonna get. You know what I mean? I'm not.
Okay.
We're being real here. We're not gonna get a Tesla for $5,000. You know what I'm saying?
Well,
So I'm saying you're gonna get an older vehicle that's workable. Obviously, they're
but
good
you can
working
get a
cars.
respectable car, that you can still be proud of.
Cheaper
that can
name,
get you A to
yeah,
B.
of course.
It doesn't have to be. You can still get it. The purpose of a car is to get you to go to work so that you can make money so that you can pay off your debt.
That's fine. So again, it's not about. I'm not stressing too much on the type of car. I'm saying
Right.
stay in your lane.
Yeah.
Buy what you can afford. So maybe you spend some time and shop around and you'll not get like the beater like I'm saying. Maybe
Yeah.
get a nice little Kia, it's cheap, or Hyundai or
Yeah.
whatever. The point is buy something you can buy cash. Period. Just pay cash for it and give yourself the same commitment. The same way you're gonna be given that Mr. Finance company that apparently likes you and got you approved. That
I know.
$350 that you're giving him every week or bi-weekly or monthly, whatever your finance terms are, put that same money aside for yourself
In your pocket.
in your pocket. That's how you invest in you.
Yeah.
Because what's going to happen is if you start saving that money and don't leave it in the bank account, open up a trade account. You know what I mean? Open up a trade account, put it in something safe, some sort of retirement savings account, some sort of maybe S&P 500 investment, something safe, a dividend stock maybe. Put the money aside and do it religiously every month like you had a car payment. Here's the two scenarios. You don't listen to me. You go finance that car today. 4 years later, look at your financial situation. You're in the same spot. You now have a $15,000 car that you have just finished paying for, and you just paid maybe $30,000 total after taxes, fees, and interest. It's paid for. But today, 4 years later, when I say today, that car is probably worth $3,000. Okay, and you have no savings, and you have a shitty car that's worth $3,000,
Yeah.
and you most likely be tempted to do it again. You're most likely be tempted to go finance a new car again because you're out of a loan,
Oh, God.
and then now you in that repeat cycle,
Yes.
and you never step forward in life. But if you take my silly advice, you buy that $3,000 or $4,000 cash car. If you don't have it, borrow it, family, friend, because you know what, you can pay them with a little bit of interest and you put yourself in a better situation. Okay, you buy that car cash, and every single month you put down that money. Not only are you getting compounding interest, you get a little bit of dividend paid on that money. At the end of the same 4-year period, I said 4 years, right?
Yes, you did.
At the end of that same 4-year period, you have over $30,000 that has collected interest. You still have your little cheap car, that's fine. It's just a form of transportation. You're gonna have a fat savings account. You can choose to go get another $2,000 or $3,000 car. But the point is now you have some savings. You put yourself a little bit forward in life, and
Yeah.
that's the best
Exactly.
way I can say it. Like
And
you
honestly,
have credit, don't do
3
it.
years
It goes by
out
quick.
of the rest of your life, you won't even remember those 3 years that you had to, drive your, older model car. Those years won't be significant in your lifetime. It's
Yep.
just, it's a little sacrifice you had to make so that you could start a savings. you have to just chip away at those little, start those little sacrifices, and then, you know, you don't remember 3 years where you had to drive your Honda Civic.
And then another thought that just came to my mind, actually, when you understand your credit, you know, the biggest BS is when a used car or finance car company, you know, well, they work with the used car lots, when they tell you they're helping you rebuild your credit when you finance a car, that's the biggest BS.
Oh yeah, tell me about that. Rebuilding.
And the reason why I'm saying it's the biggest BS is because you're over leveraging yourself. You're in a shitty situation, you know, unfortunately, whatever that reason is why your credit's bad, and now we're giving you a loan that's over $30,000 after interest and fees. The car doesn't work that, obviously went over that already, and so your credit is now what they call over leverage. So over the next 3 years, when you're trying to finance anything or rebuild that credit, any boy pull your credit saying, hey, you got more debt than you can handle. So you're not rebuilding your credit.
Right.
You're just in a situation you can't get out of.
Yeah.
But guess what? If you listen and you did not finance that car and you start saving money, 3 years later, when you go try and apply for a loan, you have assets. You have money in the account. You have money in your trading account. You got money sitting there. Your credit will rebuild. You know, taking more debt is not rebuilding your credit. Eliminating that debt is what's going to rebuild that credit.
Exactly.
That's the only point I wanted to make on that.
Exactly. So basically, if you require financing for a used car, try to see if you can, you know, don't do it actually.
If you have less than perfect credit.
You know, if you have less than perfect credit, yeah. If you have bad credit, and your focus should be on, you know, paying back your creditors and saving money, don't get yourself into a crazy,
you know what,
high interest
quite frankly,
used car loan.
Quite frankly, you shouldn't. The whole point is you shouldn't find. I do. This scenario, it's like exaggerated when you have bad credit, because that's where the interest rate spikes significantly.
Right.
But in reality, that situation is for anybody technically. You should not finance a depreciating asset, period, even if the interest is 4% or 5%, unless you have an investment that pays more than that. That's kind of like, I guess, a summary you should take from that. If I got $20,000 in my account and I can invest that money and make 6%, and I need a car, and then I can go ahead and finance that car at 4%, I have a savings of 2%, so I'm in a profit of 2% interest.
Right.
You understand
No, I
that?
know what you're saying.
So that makes sense. But if I don't have any investments and that money would have just been in my account, obviously it's better to buy the car cash and have no interest, period. Right? So the interest rate is pros and cons. What can you opportunity cost? What can I do with that money? What can I not do with that money?
Right.
That's it.
Good. Oh, God, that was loud. My ears are ringing.
Oh, I thought we were supposed to like disappear when we